Okay, let's talk about credit card statements today. So here's a representation of a typical credit card statement. It's got your name, it's got the company address, your account number. It's usually a 16-digit number. Okay, shouldn't be giving that out except if you're purchasing something. It's got the billing date on there and the payment due date. So the billing date is November 15th. The payment is due by December 1st. If it comes in later than December 1st, that's going to be bad for your credit. Okay, they're going to report you as being late. Next, it shows a bunch of transactions. So this person on October 17th went to Pietro's Pizza, spent $35. On October 22nd, went to King Road Safeway, spent $139.10. On the 31st, went to Macy's, probably bought a Halloween costume for $38.50. Also went to Kohl's, spent $21.95. Ordered something on Amazon on 11/9 for $18.05, and then on November 10th, sent in a payment of $75. Okay. Now down here is the summary. So let's move this up a little bit. This part down here is the summary. So your previous balance, this person carried a balance of $150 over. Shows the payments. This is a credit of $75. This is the sum of all the purchases was $284.45. There was no late charge, so it was paid on time. Finance charge of $3.53, so that was the interest that was charged on the balance. Here's the new balance. So how do you get the new balance? You take the previous balance, you subtract the payment, you add the new purchases, you add any late charges, you add the finance charge, and that equals this. Then they give you a minimum payment. Okay, you can pay more than that, but you have to pay at least $20 in this case. Okay, not a good idea to only pay the minimum payment because your balance is going to get bigger every month, and you're going to be paying a lot of interest, which it tells you right here. Here's your APR is 18%. Okay, average daily balance. So what they did was they figured out what the average of how many days did of the month did was your balance $150. How many was it each amount? And then they averaged that out. It came to $235.10. 30 days in the billing cycle. So they take this times the monthly periodic rate of 1.5%. Okay. I'm sorry. They take this times the average number of days of billing cycle, and they figure out your percentage. Okay, and that's what your new that's what your interest rate or what your finance charge is. Okay, now look over here. It says total credit line is $5,000. So this person can use up to $5,000 on their credit card. The available credit is going to be the credit line, $5,000 minus the new balance of $363. So this is how much they have that they can still charge. You want to keep this number as big as possible. Okay. Okay, so the summary portion of John Smith's credit card is shown below. Explain how the new purchases amount was determined. So we just kind of went through that. So they took the previous balance, $150, minus the credits, so minus $75. Okay, so that's $75. Then they added the new purchases, $284.45. So $284.45 plus 75 is $359.45. They added the late charge, which is $0. They added the finance charge, $3.53. $362.98. Huh. Somewhere we have a mistake. So let's try it again, make sure we didn't make it here. 150 minus 75 plus 284.45 plus $3.53. 362.98. So this should be 362.98 right here. So sometimes there are mistakes on statements. So this would be one that we caught one. Our balance should be a little bit lower than, so that would be an instance where you would call the credit card company and go, hey, we got a problem here. Explain how the new balance amount was determined. Okay, we just did that. So he's cake. All right, Pasquale has a credit limit of $15,000 on his credit card. His summary looks as follows. So he had a balance of $4,598.10. He made a $4,000 payment. He purchased $1,368.55 worth of new stuff. He had a late charge of $20. He had a finance charge of $578. So let's check and make sure that this new balance is correct here. So $4,598.10 minus $4,000 plus $1,368.55 plus 20 plus $5.78, $1,992.43. So that's correct. This is the correct balance. Okay, his average daily balance is $2,435.10. Okay. Now what we're supposed to figure out is what's his total available credit? Well, that's going to be $15,000 minus this because he's already using this part. So $15,000 minus $1,992.43. This should say $13,007.57. That's how much he can still charge. Okay, Marianne is examining the summary section of her credit card statement. She has checked all the entries in her bill and agrees with everything except the new balance. So she says that this is a mistake right here. Determine where the error was made. Okay, so let's figure it out. We've got $1,748. That's her previous balance. She paid $100. So that's $1,648. Now she charged $800. So we'll add $800 to that. So that's $2,448. She got charged a late fee of $9.15. So we'll go ahead and add that. It's $2,457.15. She had a finance charge of $19. So we got to add that. So her bill should be $2,476.15, which is exactly $100 less than what it says. So it looks to me like they did not credit her $100 payment. So this is definitely where you want to go call your credit card company and go, hey, this doesn't make any sense. I think you left off my payment. Okay, you're going to finish your Chapter 3 packet. Real short lesson. This is a pretty easy little section here. Pages should look like this. And there's analyzing a credit card statement right here. There's a nice looking one for you to figure out. Now notice this. She has different rate for purchases at 19.8%, but cash advance is 21.8%. That's very common. It's usually bigger difference than that too. So if you go take money out using your credit card, not a wise idea because it's probably 24, 25%. So anyway, you're supposed to analyze this. I'll let you do that. And then I'll see you in class next time.